Aloha YouTube. Thank you so much for checking out this video. If you are new to my channel, my name is Mark, Mr. Dividend Investor. In this video, we are going to look at 5 dividend stocks that in my opinion are the best long-term stocks to buy and hold forever. These stocks are solid companies with established dividend track records of providing dividends to their investors. They also have great products that many use. It's probably most likely in your households that you probably use. They're well-known companies that, in my opinion, if it's not in your portfolio yet, you might definitely consider them, because these are great products, great companies. As always, all of this is not financial advice, so please make sure you do your due diligence and determine whether these 5 that I'm going to present is part of your financial goal. So before we move, hit that like button, hit that subscribe button, and don't forget to hit the notification bell so you don't miss out on any of the videos that I put out. Without any more delays, let's take a look at these companies. So the one I want to talk about first is Coca-Cola. The ticker symbol is KO. For those of you that are not familiar with this, it is a company that provides beverages. Definitely a iconic company. Looking at this thing too, I'm a big fan of Marvel as well, so they have some limited Coca-Cola products, but most of the products are based on beverages, but they also have some other beverage like juice and some refreshments. Great company in my opinion. One of my favorite dividend companies that are in my dividend portfolio. Now if we go to Simply Wall Street, based on their dividend safety score, they're rated as 80, which is safe. Your dividend yield currently is about 3.22. Market cap is about 259, which is a mega cap. Now moving along to the key metrics, you can see payout ratio of 68. Forward payout ratio is about 69. During the recession, they've increased their dividends from 07 to 09. Looking at this amazing dividend streak of 104 without a reduction. Moving along to the dividend growth, last 20 years about 7%, last 5 years 3%, and then you get your latest of 5%. Again, from 2004 to about 2022, you can see that upward trend, which is great. Dividend growth streak of 61 years consecutively, uninterrupted for the past 104 years without a reduction. So pretty solid, pretty amazing performance. Payout details: you get paid quarterly in the months of April, July, October, and December, and your annual payout will be $1.94. Now one of the things you can see right here is for each time they get paid, you can see the increase. So from July to April there's an increase, from April to April there's another increase. See, from April to April there's another increase. So definitely a good sign if you are a dividend investor for this company. Based on Simply Safe Dividend, it looks reasonably valued. You got your PE ratio right here. 52-week range is getting closer to the high, right? Currently at the time of this video about 60. You got your PE ratio of 21. And then you can go down, we can go down here real quick, looking at all the other financials. As you can see, earnings per share, sales growth, total sales, outstanding sales, return on equity, which is 40. They usually say it's above 15%, which is our preference, so it's above it. Return on investment capital, above 20 is their preference, and then you got 18. Operational manager, net to debt equity, and then interest coverage. Now if we go to Simply Seeking Alpha, based on their dividend grade, you can see right here, dividend safety of B, dividend growth of A, dividend yield is C+, and dividend consistency is A+. So definitely this is what I like to see. And then you got your dividend safety score right here, payout details, record date. So your ex-dividend date is 3/14, and then your record date is 3/15 right here. So, and it's paid quarterly. You got your grade factors right here. Next on the list is Microsoft. Ticker symbol is MSFT. Definitely another favorite company in my opinion. It is a company that another iconic company. They do like gaming consoles, laptops, software that everybody uses, and all those other products that Microsoft is well known for. Looking at the Simply Safe Dividend based on their dividend safety score, they're rated as 99, which is very safe. You got your dividend yield of 0.75. Market cap is 2.97. Going down to the key metrics, you can see payout ratio is very low for most companies, which is 26. Payout ratio is about 25. They've increased their dividends during the recession. Dividend streak of 17 years without a reduction. But look, check out this dividend growth though. Last 20 years, 19%. Last 5 years, 10%. And then you got your latest of 10%. Again, you can see 2004 to 2022. It was stagnant from here, but then after that, from 2010 to on, you can see the increase. I think it's going to increase continually. I think this is a product. Microsoft is one of those leaders that, with the AI movement, I think it's going to be a major player in my opinion. Dividend streak of 17 years without a reduction. Dividend streak of 13 years of increases, and then you got your payment details quarterly. Months of March, June, September, and December, and you got your annual payout $3 per share. Again, look at this from September to March. You can see that increase, and then there's another increase and another increase. So they think, based on Simply Safe Dividend, it might be overvalued, but then Microsoft is a solid company in my opinion. Look at this. It's getting closer to the 52-week high. Payout ratio is about 33. P ratio, sorry. And then you got your financials right here. You can see earnings per share. See that growth. Earnings per growth. Outstanding sales. Return on equity, again, 10% is what they're looking at. It's at 39. 8%, and they got 29. Operating margin. Free cash flow margin. And then you got all those interest coverage. Now looking at Seeking Alpha based on their scores, dividend safety of A+, dividend growth to A+, dividend yield D, which I kind of agree, but their consistency is also A. Based on their ratings, they rate it as hold, strong buy, and hold. Love this company. I always think it's a buy in my opinion. Now on to the next one. Johnson & Johnson, ticker symbol is J&J. Company, another solid company in my opinion. They do a lot for medical, tech, and all those stuff. So you definitely have these products in your household. Now, if we go over to Simply Safe Dividend, based on their dividend safety, they rate it as 99, which is very safe. You got your dividend yield of 3.35, market cap of $356 billion. And now looking over the key metrics, you can see payout ratio is 45, forward payout ratio is 46. They've increased their dividend. Again, look at that, 108 years without a reduction. Dividend growth last 20 years, 8%. Last 5 years, about 6, and then you got your latest about 4.2. Again, look at that, boom. From 2004 2020, increase going up. 61 years without consecutive increases, 108 years without a reduction. And then you got your payment details in the quarterly: March, June, September, December. Payout ratio is about 4.96 per share. And then look again, you can see how it increases as each year. So again, based on their Simply Safe Dividend, it may be undervalued. 52-week range, pretty good. It's in the bottom, close to the 50-week low. Forward ratios right there. And then you got your other financial statistics right here: return on equity, operating management, and all that stuff. So now if we swing over to Seeking Alpha, looking at their dividends, you can see a dividend yield of B plus, and then you got your rating over here: buy, holds, and buy. And then you got your dividend yield, ex-dividend date, record date, dividend yield over here. You can see forward dividend yield of a B plus, dividend growth. You can see the C plus right there, and then dividend safety, and then the dividend history. And then what I like to also look at is the dividend estimates. So you can see right here, based on their dividend estimates, they feel that it's going to increase in the next 3 years. So which is great. Another company that in my opinion is a solid company to invest on. Next on the list is JP Morgan. Ticker symbol is JPM. Another company that I think is a solid company. Now, if we go over to Simply Wall Street, based on their dividend safety score, they're rated at 60, which is borderline safe. You got your dividend yield of 2.48. Looking over the key metrics, payout ratio is about 25, which is very low. They did cut their dividend, and then the payout ratio is about 29. So dividend growth last 20 years 6%, last 5 years 9%, and then you got your latest is 9.5. 13 years of consecutive increases, 14 years without reduction. So they did cut it on this time, from 28 to 29, 08 and 09. But then they recovered, as you can see from the chart. Quarterly is your payment detail: January, April, July, and October. Payout ratios of payout of $4.68 per share. Sorry. And then here is your stat. Could be overvalued based on them. And then you got your 52-week rate high, getting closer to the high. So if you're planning on getting this, I would wait for a dip so you can get it lower. And then you got your financials right here. My opinion, this is a solid company. Another one would probably be Bank of America. So if there's something you want to go, definitely check out that one as well. But I like JP Morgan as well. Now, if we go to Seeking Alpha, based on their safety score, you got your A plus, dividend growth of C, dividend yield of D, and then your dividend consistency of B minus. Your rating right here is about a buy and a hold. And then the last, in my opinion, is none other than Procter & Gamble. Ticker symbol is PG. This company engages in consumer packaged goods. Another company that I love, that I use in terms of the products. Now, if we go to Seeking Alpha, Simply Safe Dividend, based on their dividend safety, you're rated as 99, which is very safe. Dividend yield of 2.55. Now, going to the key metrics, you can see payout ratio is 57. Look at this, guys, 133 years without a reduction. Dividend growth, last 20 years 8, last 5 years 6, and then you got your latest of 7%. Again, I always like to see an upward trend on 2004 to 2022. Look at that upward trend. 67 years without increases, 133 years without a reduction. Quarterly payment details in February, May, August, and November. Payout ratio is about 403. And then you got looks really valued. Again, you can see how it increases as the year progressed. And then you got your 52-week range getting closer. P/E ratio 23. And then you got your financials in here. You can see it from there. Return on equity, free cash flow, net debt capital. And then now let's move along to Seeking Alpha. Looking at the dividend grades, you can see dividend safety of A+, dividend growth of A+, dividend yield of C, and then dividend consistency of A+. And then you got your ratings of hold, buy, and hold. Now, if we go over to dividend estimates, you can see from their estimates, they're also thinking it's going to increase as the years continue. And look at that. That is a great thing to see. All right, guys. there are your 5 companies that, in my opinion, are good long-term companies to buy and hold. Let me know what are your 5 ones. Put it in the comments as well. Would love to hear some of your 5. Also, definitely check out other videos as well. Thank you so much for watching. Stay cool, keep investing, and I'll catch you guys in the next video. All right, take care. Aloha.